All right, hey there. Good morning, everybody. It's a few minutes after after 11 a.m. Central Standard Time here on Friday, the 11th of February, 2022. I'm Chris Franks with Texas West Capital, coming to you live from a bright and shiny, fun, great day out there here in Boerne, Texas. Good to have y'all checking in with me. I know a lot of you guys are from areas on the other side of the globe, so your time is a little bit different than ours. Later in the day, excuse me, it may be even really early morning, but glad to have you all here. Who's here already? We got Chris Day, Devin. Who else we got? Nevlusian, Hank checking in from Thailand still, he says. Bamboo, let's see here. The real Go-Go, what's up, man? Bamboo is here. Ah, man, you like that tips, tricks, and techniques, the tier 3 live stream there on Wednesday? Awesome, man. Awesome. Glad. Glad to have you there, man. Alan, what's going on? Keith is here. 51 ETH data. Paul Faulkner checking in from London as our base of, I don't know if I want to call you guys fans. I don't know. Maybe you're just killing time checking in. But you are growing out there in the UK. Love that. Let's see here. Hilner's here. Who else is here? Chris Stevenson, Pepe, and Michael Williams. So, hey, good to see you guys. Everybody else listening in. Bitcoin doing its thing. Man, again, I don't know how you guys do it. I started trading back just over 20 years ago. Oh, I'm sorry, 20 years ago. Geez, it was 25 years ago, 95. And, I think it was probably a blessing that I didn't have access to social media like you guys do. And just this huge, globalized world and the internet and everything, because man, I sit here day after day and I just look at this stuff and I shake my head thinking, man, how can you guys actually do anything with the kind of nonsense that's set out there a lot. And the sad part about it is I don't believe that most people are actually out there trying to intentionally lie to you. I think they believe that they know what they're talking about, but I think that's even worse because they've got this false confidence in something they really don't understand. And so if you're coming in new, it's hard to figure that out for yourself. You don't have any time in front of the charts and whatnot to really understand what may be going on there. So just take it easy if that's you coming in with all that there. There's a lot of half truths out there, guys. Like I said, I don't really believe that it's really all that intentional, but it's out there nonetheless. And the people who do it, seem to have very, very, very far reach online. They're marketers. They get you guys to buy into whatever they're saying. They say the things that you want to hear so that you buy into it. But, man, it's just not going to do anything for you guys. So hopefully you guys are, staying safe with all that stuff out there. At the end of the day, guys, you've got to do your homework. You've got to know what you're doing. It's the number one way to... you can't guarantee that you're going to be successful, but to get as close as possible to doing so. Mark, what's going on, man? Good to see you here. Let me see here. So, with Bitcoin right now, we kind of look at this as a flat. So AB potentially not done yet. If we get a breakdown below the swing low over here, what is that here? About 42,622. That initial target's going to be this high volume node over here, right around the 38.2 retracement. This wave for the lesser degree kind of support area, right there at 41,550 or so. But because this is a flat, because we're looking at this as a flat, ABC down, ABC up, this has to be 5 waves down. So, I'm looking at this. If it's going to come down this area, this is probably a 1, 2, and you'll get a 3, 4, and 5 just as a probably something along the lines of this here, kind of like just an ending diagonal is what you'll probably see. So you can get maybe like an ABC down, ABC up, and then ABC down for 3, 4, and then ABC down for 5. So something like this, where price is consolidating, getting closer and closer together. Volatility is dropping off as it comes down toward this area, and then you get that rally up. If the bottom is in right now, the first kind of hint that it is will be a breakout above the 15-minute pivot, which is right here at 44,195 and 15 cents or so. If we can get a breakout above there, especially if we can get impulsive, which means, again, large volume, large candle spread, that'll go quite a bit of ways into saying, okay, well, maybe wave 4 is done over here. But we really need to see a breakout above. I mean, at the end of the day, you have to see a breakout above wave B here at 45, 855 to say, okay, well, this flat correction is done. Until then, could still pull back down, right? But if it's done right here, if 4 is done right here, wave C of 4, then we've got an expected target up here of 47,421 there, which will give us wave 5 of 3, circle 3, okay? Now I've got some other things noted on here. We've got the yearly open over here around 46,211. We've got the daily R1 pivot up here at about 46,692. We've got the daily pivot down here at 39,820. So, usually what happens when you come in sideways, let me kind of throw this up over here. Let's do it this way. We didn't even come in sideways. We broke up impulsively through that daily pivot. And so usually what you'll get is a rally toward that R1 and then a pullback down toward this pivot, maybe just kind of this 41,000 area here. And then you'll look for a breakout above this, above that swing high. And if you can get that, you get the move back down, the breakout there, then that pretty much says all you need to know, and you should expect price to kind of rally on up through here. So, we could still, like I said, the count still has us going up a little bit further here, probably up to around this, maybe this 48,000 area, high volume node, just above the R1 pivot, and then we'll pull back, like I said, maybe around 41,000, 41,500 kind of area. And then head up, we get 1 up there, and then 2 on that pullback, and then 3 heading up. So, I mean, that's what we're looking at the moment. Let's see here. Let me see. Yeah, I mean, again, if it's going to pull back, it makes the most sense to kind of pull back to this base here that we've got. But if it continues going through there, again, we'll look at that 50% at 40,626, which puts us right above the 1 and 4 hour pivot there. Because, generally, your initial target for wave 4 is the 38.2 retracement. The second target is the 50% retracement. With flats, though, they don't often get back down there. They usually just finish just below wave A and then head up. So that's why we're kind of leaving this open, as maybe wave 4 might be done here. But, the first hint is going to be that breakout above the 15-minute pivot. If you don't get that, you should still consider looking at the downside. If you get that, well then, I mean, you still have to be careful. It could still go to the downside, but now you're looking at that breakout above wave B, which will confirm that wave 4 is complete. And like I said, you get your 3, you get your 4, the pullback, and then you'll get your 5, and then you'll have 1 up, 2 down, and then back up. So overall, again, nothing negative really looking at what's going on in this at all. So one of the things that's encouraging right here on this decline, as far as the idea that this is still reaccumulation and not like some top and we're heading way down here, is the fact that on this drop here, you can see that volume drops off. So volume drops off on the drop. What that means is basically they sold here and then just kind of let the market carry it down. And there's just lack of interest. The further it gets down, the less interested the market is in messing with it. They're less and less interested in selling the further it's gone down. That's why that volume drops off. But look what happens. Boom, that volume kicks in right here as it dips below, prints this spring below the range low there. That's where demand kicks right in. Volume goes in, boom, pops up, pulls back. And it pulls back here on much lower volume than what you had here. And this is something you look at when you have a spring. You're looking for, you've got your volume that comes at that spring, and then when you get the pullback for that secondary test of that area, you're looking for volume to be much lower, because what that tells you is, again, you had the selling here, which demand caught and took up, and then you come back again, and there's a significantly less selling coming on here. Usually denotes some sort of bottom. So again, we want to see that follow through on the way up there. And then, so that's what I'm looking at the moment. But, still keeping an open mind that if it does drop down below here, we'll just get this move on down and then up. But overall, again, if this was to be a topish area and come back down and, just keep on heading down here, you would expect to see a lot more follow through on volume. You would expect to see volume rallying up, kind of like what you see here as it did. As a matter of fact, what do you actually see here in this range? What you see here is you see the volume pick up right here at the bottom, and then you see the volume thrust up there, and we get the pullback, and again on that pullback we get a volume, we get volume on the bottom there, so demand showing up again. You get it right to this area where you have this resistance, so you see volume start kicking in again. The breakout of that resistance here gets us this volume on this candle. No real selling though at the top, nothing significant, not like you're seeing on the bottoms, right? And then it pulls back, and as it pulls back, you notice the volume drops off. That's most often the way that you define a corrective move, is when you have volume pulling back on that volume dropping off on the pullback, right? And then of course you rally back up there here, you get up here, drops down, but this area, this drop into this area right here, and then this rally up, so it's this area right here is where that volume pops up. So again, demand showing up. Gets up to the top. Volume's still a little bit elevated because of the move up there, but it is selling into it. Sells it down. But, again, the selling's just right here. The volume drops off the rest of the way down until you get to the bottom here where demand shows up again. So when you're trying to define what's going on, trying to understand what's going on in that range, what you're looking at is volume at the bottoms versus volume at the tops. I mean, just put into a quick, easy way of thinking about it. If your volumes are strong at the bottoms, that means demand is showing up. If it's strong at the top, that means supply is showing up. But the next part of it is you want to see follow through, especially if you think it may be selling, like distribution going on. You want to see selling through this. You want to see them continuing to sell through this, pushing that price down. You don't just want to see them sell at the top and then just let it just kind of just float on down, which is what you're seeing here with this lack of volume. Again, until you hit that bottom where demand definitely shows up here. And here we go, rallying back up. So we do have volume kicking up pretty strongly here, up there at that top point. Kind of pulling back now. If this is the bottom, it's probably like a 1, 2, 1. We'll get a 2 on the pullback, heading up. And that's kind of what I'm watching there. So, yeah. Let me see here. Who else is here? Genghis Khan. Good to have you checking in, man. Hopefully you'll enjoy it by the end of it. Ace and Risk, what's on, buddy? Andrew's here. Hangry Patrick, man, I still love that name. It makes me laugh every time. Blaze checking in. Andrew Bennett says, Bitcoin daily. So since the local bottom, I'm seeing a upward channel forming, showing us hitting support at the EQ. Okay, well, let's take a look at that. Let's see here. Off this bottom here. Let's see, here we go. Like that right there. Oh, I see, and you're pulling it way up there to that one. So down the bottom there, up to the top there. Yeah, we are finding support right there at that ascending EQ. Ascending channel EQ right there. Also, again, the top of this previous range here, I just kind of extended it over. And you see that right there is where we're kind of following that, finding some support there. So, yeah. Yes, Stoke RSI is overbought, but it's been overbought since back over here on January 29th or so, which was when price was here about 37.5, 38,000. And we've gone all the way up to 45,000, almost $10,000 up, $8,000 up off that. So that's almost 20%. And we've just stayed overbought. So I point this out because I want you guys to understand that when you're looking at the Stoke RSI oscillator here, the larger the time frame, the more it tends to stay overbought or oversold as price continues pushing. So, or pushing down or pushing up. So, again, just because it's up here doesn't mean it has to necessarily come down immediately. You can see that it does sometimes take these extended periods up at the top or the bottom as it goes through there. Let me zoom back in here. Yeah, I guess I can throw this on here for a minute. Let me see. Kind of make that a different color anyway. Oh, had it. You know what? Actually, let's just do it that way. There we go. The important thing, again, remains that we are above the daily pivot, and we are especially above the 3-month resistance here. Remember, that was 3 months in the making. We broke out of that on high volume and large candle spread there. Retested it. We've rallied up since. Remember that pattern target based on that there is up here at around $57,000. So that's based on the height of the channel. That doesn't mean it has to get there or that it's not going to go further. It just means that pattern targets based on that pattern get you right there. You can see right here, if we look at this drop from wave X to the bottom here, from wave X to wave, so it's wave Z, here's what it is. But we can see that point of control is right here around where it's finding support. So something that, generally you would expect. And so we want to see that continue to find support and to rally up off of that to keep everything still going and looking really well. One thing is, when Bitcoin spends some time pulling back in an extended period of time, 3 months, usually, historically, what happens with Bitcoin is you get shorter pullbacks. So whereas you might normally be expecting a 38.2 pullback on a wave 4, you might only get a 23.6 or even less. Same thing with your wave 2s. You might get that 23.6 to 38.2 kind of pullback rather than the 50%, 61.8 kind of thing. And that's just a product of what, is usually going on with Bitcoin once it starts going. Again, everybody generally are, still new traders, most of the retail market, amateur traders. And so, they want to be rich tomorrow. They want to buy the bottom, as low as possible and all these things. So they tend to jump in when it gets going, and those pullbacks resultantly are often short-lived, at least for a while until it, kind of stakes its way out a bit. So just some things to think about that, guys. Hey there, Diego. Brian here. Joe the Butcher. What's going on, guys? Bianca, ma'am, checking in as well. T-Ball, what's up, man? Glad to see you checking in. Devin, what's up? He says, what do you think about the updated RSI? Are you talking about here in TradingView? I don't know. Is anything different? Oh, okay. Let's see. Okay. I haven't even looked at it till now. So what do we got going on here? We got an SMA going on there, or you can change it. SMA, Bollinger. Oh, wow. Okay. I like that. I like that feature. You don't have to add them on there yourself. You can change it to Bollinger Bands or whatever else you want in there. EMA. You can change the length and all that on there. I like that. Other than that, the RSI still gives you the same information. So I guess I might have to start using that now. Throw a little extra stuff on there. A little panache, right? By the way, guys, if you're using TradingView, notice, on these moving averages and things, they all, I believe they all now have this time frame selection you can use now. And so you can do it either the chart, which means, let's say you were doing an SMA, with a 9-period look back. You can do it based on, we're on the hour chart. We can do it based on the 1 hour, or you could, if you were on the SMA here, you could go up here and just change it to the 4 hour, the daily, whatnot. That's really helpful because, if you're using, I'm not a big fan of using moving averages usually, but if you're going to use moving averages, a good rule of thumb is to have the moving average of the next time frame up. And the way we look at that basically is, if you're looking at the 15-minute, you want your moving average to be of the 1 hour. If you're on the 4 hour, you want that moving average to be on the. If you're on the 1 hour, you want the moving average to be on the 4 hour. If you're on the 4 hour, you want it to be on the daily. If you're on the daily, you want that moving average to be on the weekly. And that's just kind of like the next major kind of time frame up. And what that does is, if you're trading moving averages, it allows you to keep focus on what the larger trend is. And, really, one of the biggest things you can do to help yourself be successful as a trader is just trade in the direction of the trend. If you're above that moving average, you just want to take longs. When it pulls back, you want to make, you want to take a long. You don't want to short. If you're below the moving average, then you want to short. You don't want to take longs. Trade in the direction of the trend. That's one piece of advice I can give you guys that'll significantly help you with limit your losses on trading, because a lot of times what you get caught doing is trying to trade that counter trend, that correction, that pullback. And it's a lot more difficult, guys. It's a lot easier to trade in the direction of the trend. It just is. It is what it is. Now I'm going to say that, and most of you are going to ignore me and do what you're going to do, and you're going to lose money. It is what it is. But for those of you that actually are listening to what I'm saying, and you want to know the things that you can do that are easy to do, that don't really take much thought on your end, that can help you be a more successful trader, that's one of the key ones. Trade in the direction of the trend. Okay. Let me see here. How reliable are margin pressure levels for trading? You know, what you guys see, what I've noticed is there's a lot of really technical things that people tend to look at these days. But really, as a trader, the more simple you can keep it, the better. So, you know, people are going to try to give you this information like that, like, I don't know, liquidity levels, stuff like liquidity levels are helpful, I guess. But, you know, again, we're just getting really, really, these days, because of the technology that we have available now, of being really technical, really kind of gritty with it. But most people don't know how to use that effectively. You know, especially if you're still fighting with your emotional side of it. So I don't tend to worry about things that get too much like that. You know, too really technical. It just tends to cloud what you're looking at a lot more. If you want an easier trade, zoom out on your time frames. Use the bigger trade, because look, see all this overlap. You don't trade that nonsense. Don't zoom in. This is the 1 hour chart. Don't zoom in a 5-minute chart and try to trade that nonsense. It's silly. Zoom out here to the 1 hour or the 4 hour and trade that. Look at your swing high, your swing low. Work with that. Start from there. You know, again, right here, you could try and trade all this in here, and you might be all right. But if you can't even identify that this is a range forming here, and what may happen in terms of the range, either via Wyckoff or Elliott wave are two great ways to understand what's going on here. I mean, if you can't do that, there's no reason for you to be you know, trading when it's going sideways. You're just asking to lose money. Wait till the trade makes a defined movement, whether it's up or down, and then jump in on that. Again, guys, I say this all the time, but the key to being a successful trader is to constantly lock in profits. Okay? You know, I just think there's just too much. There's too much information out there that for most people would take too much education and training and understanding to really use somewhat effectively, much less really effectively. But we see them pop up on, you know, on crypto Twitter and everything all the time. And you know, honestly, guys, I would just suggest that you just stay away from it. Everybody's trying to find that silver bullet, right? Or that golden goose, right? What is that holy grail of trading, where you're going to be right all the time and never wrong? Well, that doesn't happen. That's never going to happen. But you know, you can get yourself as close as possible by using proper risk management, and then consistently locking in profits. If you can do those two things, then time and compounding is going to take care of getting you where you want to go as far as building up your capital account or your wealth. But it's not going to happen overnight. You've got to get that. That's an erroneous thinking by a new trader. We all think that. We both want, you know, we all want to be rich overnight. And it's just a waste of time and money trying to do so. Just understand it's going to take however long it's going to take, and get in there and refine your process. Build a process that works. If you can do that, it'll take care of it. Stop trying to, you know, to go all in, 100% leverage because you think there may be a bottom. Most of the time you're going to be wrong, which means you're going to lose a lot of money. There's just no reason to do that, guys, okay? The newer you are, the more simple you need to keep it. That doesn't mean you can't go on and learn more advanced ways of trading, you know, Elliott wave, Wyckoff, stuff like that, because I'm a firm believer that those things will help you along the way. You know, to be a little bit more precise, give you a better understanding of why price action develops and moves the way it does, that it's not random, which a lot of people unfortunately think, wrongly think that price action is random. And so, you know, your goal as a trader, guys, shouldn't be to get all fancy and try to get every penny that you possibly can. That's for people that plan on losing their money. If you want to be a successful trader over time, then be consistent. Consistently profitable. Consistently locking in profits. Consistently using proper risk management. Consistently not trading emotionally. The rest of it you can figure out. But that right there, if you can't do that, you're just going to have a hard time trading, guys. Okay? Eldo says, understanding the fundamentals takes you more than halfway to mastery. Yeah, it really is, guys. You know, it's so much in life. The things we do, we try to fly before we can crawl, right? And so we don't ever master the fundamentals of whatever it is that we're trying to do. We just kind of muddle on through them, skip through them to try to get to the fancy stuff, right? Because we can't be bothered with the boring, rudimentary, basic stuff. But that rudimentary, basic stuff, day in and day out, that's what makes you your money right there. Oftentimes, most of the time, skipping that and just going on to trying to fly before you can crawl is just going to end up losing money. If you can't do the basics, you can't do the rest of it. So, yeah. Someone asked recently if it was overly ambitious to make $300K when starting with $100K in a year. Whew, yeah, I would say so. I would definitely say so. Anytime you're looking to make 100% or more, especially just starting out in a year, man, so you guys, a lot of you guys are young. You'll never understand when crypto wasn't a thing and it was stocks, and a good year was 6 to 8%. That was a really good year. Crypto has kind of really made people believe that it's so much easier to get so much more. And again, most of traders end up losing their money, guys. Now, it doesn't mean you can't make more than 6 to 8%. You can. It's a wildly volatile market, but you got to be, again, you got to crawl before you can walk before you can run before you can fly, right? But y'all are trying to, many times just trying to skip that middle part, get from crawling to flying, and that's where you end up losing a lot of your money. Yes, it's possible with a $100,000 account to make $300,000 a year. It's not likely if you're new. You've got to be a consistently profitable trader to do it. So, But, again, you get drawn in because you hear the stories of these very few people who maybe lucked out and did it, right? Or these people who have a lot of experience who have been able to do that because they have a lot of experience. So make sure you don't get caught up in that. Let me see here. Andrew says, I found something yesterday on the Bitcoin weekly RSI. It appears that the macro bottom hit undersold around December 14. And then 4 years later, hit undersold again in December 18. Now it looks like we're heading to that undersold again in the weekly going into December 22nd. 4-year cycle? Let me see. Let me look at what you're looking at here. Let's see. You were talking about 2018 being like, this one right here. Yeah. And then, I don't have it on this one though. But yeah, over here. You see it coming up out of here. This is a Coinbase chart, so it doesn't go back that far. It doesn't necessarily have to. I mean, right here we got pretty close. That was that December 2020 drop. March 2020 drop there, and we came pretty close. And here we are again. And so, in doing this, we've got higher lows in price and we've got lower lows with the oscillator, hidden bullish divergence. We're coming up to that weekly pivot. Again, guys, I talked to you from a larger standpoint. If we're breaking out impulsively above this swing high right above the pivot here, so that's 52,100, that's the key level. If we get above that, there should be no doubt that we're heading up here R5 at least. I can't ever guarantee anything, but usually that's the way it'll work. Coming down from the low like this. Again, looking at this range here, you have volume dropping off through it, but you've got volume picking up a little bit on the downtrend here. So what you want to see is volume continuing to build up as we go here to kind of give you some support and all that. But, again, guys, we're still looking at the possibility that maybe this is a triangle. It's still wave 4 is a triangle, right? And so what we should, now, my problem with this is we generally expect RSI to print a triangle as well. And what we actually have here are higher lows and then we have lower lows here. So there's no triangle forming in RSI. So that makes me real iffy. The other thing is you want to see volume overall dropping off as this continues to consolidate. Now, we talked about GBTC here, and here it is again. We talked about the possibility a while back of this being a spring. Secondary test here, much lower volume. That's perfect. Up here again, much lower volume again. Perfect. Rally up. So potentially spring, secondary test, and then we've got this SOS coming up here and kind of, looking up further there. If I'm looking at this, I'm thinking, well, it looks like we got 1, 2, and then maybe 1, 2, 3, 4, 5 still coming, right? So we get a 1, 2, 3, 4, 5. And that actually aligns with the count that we're looking at here, right? If we jump back in here, see? 3, 4, 5. That's what we're kind of looking at. That's the same thing here. So it kind of gets that, that little bit area up into here. But regardless of what we're looking at, we should expect a decent rejection from this area. There's a lot of support here, high volume nodes and whatnot. Like I said, here on GBTC, the pullback should probably fill in this gap here. Maybe get you down to around 28.15, somewhere right around there. And I would think, and then it would, pull up further here. So, again, 1, 2, 3, 4 maybe, or working on 3, 4, and 5. And so then that gives us 1, 2, 3, 4, 5. Yeah, and then 1, 2, 3, 4, 5. So that gives us a 1, 2 to fill in that gap. And then 3 up and, kind of heading out through there. So, GBTC seems to be looking pretty good. Kind of helping give us some support for bullishness here with spot. Let me see here. Oh, let me see. But Bitcoin told me I could make $300,000 from $1,500 in a month. Oh, they always say that, don't they, Bianca? Hey there, Crypto Girl. Good to see you. Let me see here. Let me see. Let me see here. Jeff, what's going on, man? He says, we might be very close to a crash in oil prices. Goldman Sachs is calling for $100 a barrel this year after a parabolic run. Good counter indicator. Yeah. Again, so oil. Here we go. So, potentially could be a fifth wave and done here. Potentially could still have a fifth wave to go up toward that $100 level. I talked to this not too long ago with you guys, and I said, well, we've been up here around this 90 area. It wouldn't surprise me if the market tried to hit 100 just because 100 is that round number. It's a significantly psychological number. But either way, I think we're pretty close to being done. Whether it's already done or we've got that move toward 100. I think either way, I think it'd be done. You guys have to remember, we've had this big move here. Let's put this in perspective, guys. Look at this. Let me kind of just take this off here. This was May of 2020 over here. This was that first time the NYMEX, I can't even get it far enough down. There we go. Had ever closed negative. And so, it had that, now this is the weekly here, but it had that low of around negative $42 or so a barrel, which means that people were being paid to take the oil. And this was a big confluence of events. The pandemic thing, the lockdowns had just started in the last few months. Usually your cruise ships and your airlines are big purchasers of oil. And so with all that lockdown and everything and all that falling off, they said, no, we don't need it. So then you had you had all this backlog of oil now, because when we're looking at right here, this is light crude oil futures with the West Texas Intermediate, WTI, okay? And so when you look at oil, you're usually looking at either WTI or you're looking at Brent. Brent is basically drawn up out of the, under the ocean there. It goes out on ships. You can fulfill your contract by either taking possession of the oil or paying, the value of that contract. With WTI, though, This is all basically taken mostly out of the ground here in the U.S. It's sent through pipelines. Cushing, Oklahoma is your hub. And when everything gets filled, and at the time of this right here, I think worldwide we were like at 82% capacity as far as places to store oil worldwide. Cushing was completely spoken for. And so what happened, and what I said was going to happen at this point, was you're going to have some few enterprising individuals who would actually go and find some ships that they could lease. And then they take possession of the oil. Remember, they're getting paid 40, 30, whatever it was at the time, $20 a barrel to take that oil, using that money then to pay those ships, keep them out for a year or so, and then bring it back in and sell it. And so we had this move back up from that low of around $40, a negative $40 a barrel, up to so far about $93, guys. So pretty crazy big move up. So yeah, we should be getting some kind of decent pullback. You know, some kind of wave done being done idea and pulling back there. So definitely wouldn't be surprising. We can know. I mean, look at how oil prices were in this sideways right here, drop down, and then significantly overall, averaging here. And then after that drop, kind of averaging down here. Rising a little bit, the average is overall, but nowhere near where that activity, that volume was previously. But sometimes it's good to step back out here and kind of check that. I think it closed at around negative, oh gosh, I don't even know anymore. Let me see here. Yeah, we had a close of... It had a low of negative $40.32 and a close at negative $37.63. It had gotten, so I mean, that was that big move down. It was a great time to buy. But, a lot of people were trying to get into it prior to that, having no idea of what they were doing or that they were going to be stuck. Oh, when you have WTI, you have to take possession of the oil. If you've got the contract at the end of the contract period, you have to take possession of the oil. That's the way it works. You don't get to just pay the value like you do with Brent. So a lot of people were getting caught holding oil here, and they had nowhere to put it. They had nowhere to store it. Like I said, Cushing was full, the hub there, and they just didn't know what to do. So oil prices collapsed. Right, great times. But I mean, that's kind of what we're looking at there. So like I said, either wave 5 is in or it's nearing an end. And it makes sense, getting up here around this area. Now, if we get up here toward 100, that'll take us toward the R2. I would say that's pretty bullish because using pivots, if you move in between the pivot and the R1 and you continue to break up through the R1 to the R2, that usually signals quite a bit of bullishness. And we'll often look for it to continue heading on up overall. If we can get a breakdown from around the R1 pivot here, come back to test the pivot at least, that'll be a great pullback. Dropping below that pivot will give us this S1 pivot target here. And if we're dropped below the S1, then things really start looking interesting as heading on down well over here, this area. That's at 62.57 there, which is what it should do. I mean, again, if this is one up, we should be looking to pull back here, $50, $40, $30. Maybe this high volume node here around $40. Good target. You got a first target right there around 58. Look for this one down here around 40. Swing low in that area there around 30s, low 30s. So yeah, but we got to get that, we got to get that rejection first. So from a pivot standpoint, I'd like to see a rejection around this R1 pivot. I don't really want to see it hit the R2 because that increases the odds significantly. That'll continue higher. But if we want that decent, really good pullback, then we want to see a rejection around this R1 kind of pivot area on that. Crypto Girl says, remember when oil was so low, thought it was a good deal until Chris informed us that we would have to find a place to store the oil. Yeah. Benefits of growing up in West Texas all around the oil, right? We get to know, we get to understand all this stuff. March 20 was a rare occurrence, maybe with the pandemic. Well, March 20 was a lot in the crypto market. I think was also a lot of that whole BitMEX thing. That BitMEX engine was screwy. It was going wonky, and so until they turned it off. And the minute they turned it off, you saw price rally back up. So a lot of, I think, the extensive movement down in March 2020 was due to what was going on with BitMEX at the time. Hank says reward always equals risk. If you want to make greater than 100% a year, you need to risk 100%. I wouldn't say it always equals it, but yeah, I'd say it's pretty close. Basically the general idea being, as Hank is saying here, is that the greater returns you want, the more you have to usually risk. Yeah. You can't get huge returns by being overly cautious. But the problem with that then is you're being overly risky, right? And so you have the potential to lose quite a bit. So yeah. Wouldn't oil rally on a Ukraine invasion? Again, I think oil does what it does based on overall social mood. I think anything that happens, that maybe you might want to try and tie to a news event is just a knee-jerk reaction, but it doesn't change the overall, whatever oil's overall doing as it is. Yeah. So I don't ever attribute any kind of directional change to what's going, to news events. So yeah. Alexander, what's going on, man? How do you get the volume on the bottom of your screen on TradingView? Thanks. This volume right here. So you just go right up here to your indicators, metrics, and strategies. Type in vol. It's this one right here. Volume. And I just hit it again. If I turn off that, you see it right there? So yeah, that's all. That's how you get it. By the way, guys, again, I'll keep warning you guys. Change your candles to black and white or just white. Change your volume just to black. Get it off the red and green. You'll save yourself a lot of headache and heartache with colors. The colors are very emotional. And, emotion's your biggest enemy, especially as a new trader, okay? So dollar, here we go. So, again, we had the CPI release yesterday. The inflation number here in the U.S., we hit a 40-year high at 7.5%. And so you got this crazy knee-jerk reaction. You had the rally up, strong drop, and then just the fall right back on through, right back above. So along this area, again, people got really cocky and thought, oh, well, yeah, it's going to continue lower there. But you have to understand when you're talking about the U.S. dollar right now in these events like inflation number and jobs reports and stuff, you're going to get a lot of this. Because you have people on either side trying to make money off that news event. So you're going to have a strong move and then go out. Best thing is not to be involved with trading when these numbers are nearing to come out within a few hours of the numbers coming out. And then just let it play off for the day. Let it kind of figure itself out for that day and then go in. As you can see here, if you thought, oh God, we're going to continue heading lower here, which means the euro was going to continue heading up, well then you would have been taken out pretty hard as it goes in the other direction, breaking out above where you had your previous day spike there. Because that previous day was here. Numbers were released coming up here. Boom. Drop back down. Boom. Rally back up the rest of the day. So by the time, midnight comes out over here, right there. Midnight was your swing high up there, which went above the day's earlier spike. And now we're just pulling back, overlapping, corrective right here. Again, if you're looking here with, this is the actual dollar futures, which is on the ICE exchange. And so, again, looking at likely wave 1 here, wave 2 on the pullback, maybe done, could potentially pull back a bit further. Let's see, how far have we pulled back here? Yeah, we've almost hit that 50% here. We could come on down here to the 61.8, 65% area. We could do that. High volume node. But basically, we've got it as a 1 and then this flat correction for a 2. It stopped just below or just above, I think. Let me see here. 95, 145. 95, 160. Yeah. So 0.15 higher. It stopped. So it didn't invalidate it. So basically we got what looks like maybe a flat correction here. And then that would give us a minimum wave 3, target up here at about 96.555. So again, A, B, C coming down. And then this gets us a 1, 2 here. So this being a 1, 2 here will likely make this wave 3 higher up. If the bottom's in right there, then that actually gives us wave 5 at 97.36. So then wave 3 will be way up here at 97.36. And that will actually be, let's see here. That'll be just around the 3618 extension. So, again, common relationships for wave 3, 1618, 2618, 3618, 4618. So, makes a lot of sense on the move up there. And could extend even further. Again, minimum expected wave 3 if this is the bottom, will be here. Again, if we're going to come on down here to, maybe we'll just go 70.5 down here. That'll give us, let me see here. That'll give us this wave circle 3 target up here. Right there. Gosh, dog, let me see here. There we go. That gives us then up here. That's the 3618. So I don't think it would be too. I think there'd be a good chance we might come down to 70.5 because that gives us a 3618 extension. Excuse me. Again, this being 1, 2, 3, 4, 5 gives us 1, 2, 3 up here at 3618. So absolutely nothing happening here that says that price needs to continue lower at this point. Matter of fact, you can note that all that volume happened right in this area right here. All that demand kind of showing up with it. And then the rally up and through, which broke out, carried higher. Kind of confirming the idea that we should continue heading up, I believe. So yeah, let me see here. That's why it looks different, because I changed the colors. You thought, nah, man. No, you just double click on it and bring it up here and just style, change your growing and falling colors to black. Even here on the VPVR, again, black and gray. There's no reason to have red and green on there, guys. It's just going to be completely emotional for you. Don't do that, okay? Because at the end of the day, you're doing I'm trying to give you guys the things that you can do that are easy, that don't take any thought or any try or whatever, to really kind of implement them that can give you a better, an easier time at trading, a potentially more successful trading period there. See here. Jeff says CPI was high, but we should not forget about the base effect measuring the prices of goods from historic lows to prices of goods that are up because most of it is stuck somewhere in the supply chain. Yeah. That's still been the same thing. We've been talking about, the rise in prices is not just simply, there's more money, less product. Why is there less product? Less product because it's caught up in the supply chain, in the bottlenecks. So, what was interesting for me, let me see, who was it? James Bullard, there we go. He's the president of the St. Louis Fed. He was talking to Bloomberg News and said he's become dramatically more hawkish, and he now supports raising interest rates by a full percentage point by July 1st. So let's go through what we talked about here. So last year around January or February, and then after March, March to May area, when the Fed was saying, we're not going to raise interest rates until at least 2024, whatever. And I told you guys, I said, no, we're going to have at least 3 rate hikes in 2022, right? This was during Q2, very beginning of Q3 of last year. If you follow me, you know what I'm talking about. So I did it right here. I told you guys that's what we're looking for. And so we get here, and as the beginning of the year comes in, and also talked about the fact that we'd be doing what do you call it? Guys, my brain just went the other way. Tapering by the end of this year. And so as we got to the end of the year, that's what happened, right? So we got tapering started before the end of last year. And then at the beginning of this year, they started talking about 3 interest rate hikes now, right? This year. And then as we got to the end of the January, they started talking about 4, right? Mid-end of January, they started saying, well, I think maybe we might actually have 4. And now they're talking about possibly 5 interest rates. And more importantly, the other two things that the Fed has talked about is, one, normalizing their books. So getting rid of a lot of the mortgage-backed securities and things that they had bought during QE. So getting rid of it, right? Selling it back out there. The other big thing is this idea that the Fed has raised, since 2000, the Fed has only raised or lowered interest in quarter point hikes and drops, okay? So just a quarter of a point. And so now with that CPI number yesterday, I had been mentioning about the fact that a high number on that would mean that we'd probably see a half a point, 50 basis points raise, which is something that they haven't done since 2000, since right before the dot-com bubble burst. This will be the first time in 20 years that they do it, if they do that. And now, not only are they saying that, but again, Bullard's saying, man, you know what? I think we need to pop it up by 1% by July 1st. Now, between now and July 1st, there's only 3 meetings, guys. So you'll do a quarter point one, a quarter point another, and a half point in the other is the way you're going to get there. So, things working out as expected. As it says, investors are pricing in a 99% chance now that the Fed raises interest rates by 50 basis points in March. And that's according to the CME Group's FedWatch tool. If you've never used it, use it. It's pretty cool. And so that's 99%, but it was just 24% on Wednesday. So with that CPI number released yesterday, it's gone from 24% to 99% pricing in that they're going to get that. In fact, markets are now pricing in a very tiny chance of a 0.75 percentage point hike in March. That would be absolutely crazy. You can expect some serious movement in the markets if that happens. If we get 0.75 point, 50 basis points will still be pretty volatile market. I'll give it that. So based off this, off of this bias is a market crash, an idea that isn't too far-fetched. No, I mean it goes hand in hand with what I've been kind of watching and suggesting may be happening. Today we get up here, we still don't have. Let me kind of pull up something here for you guys. Let's see here, where are we at? We can look here at the S&P E-minis. And I mean, if we look here, it looks likely that we may have had a top back up over here at the beginning of January, a month ago. My count right here has it as a 1, 2, 1, 2, and then 1, 2, and looks like we're heading down for 3, which has a minimum expected target of 43.0925. And so, right now that gives us a minimum wave parentheses 3 target, at least down here around 36.15. And so that would give us a 5 at least at 33.85.75. If that pulls through, it's about 30% off the top. Let me kind of get this over here. Yeah. I mean, that's 30% off the top. 20% is a bull market, or is a bear market, right? 20% drop. So, I would definitely not write it out. I definitely think it's more possible than not. You can look here at your daily Stochh RSI. It is overbought. RSI itself is sitting neutral now off that oversold. We're having trouble right here at the daily pivot. Getting rejection heading down is not good. Drop below that swing low. That kind of says, hey, we're probably headed down a bit. Weekly, trying to find support on the pivot here, but look at this. So you have this wick here, and it pops up, wick again this week. I mean, it's all handling right here. It's having trouble at this point. If it can't get above that, it comes back against us. I mean, I think that's the beginning of confirmation that top's probably in there. Again, tech stocks just taking a beating left and right. Meta, Facebook there losing largest one day, just incredible amount of destruction of wealth as that dropped. So, yeah. So good times, right? Let's see here. Just gotta catch up with you guys. Anyway, so yeah, so that's what we kind of got there. If we look at, again, we've looked at oil, we've looked at the dollar, we've looked at Bitcoin, we've looked at stock market here. We can check over here, silver prices. Let's see here. Silver prices looks like we've got this wave 2 up here. And then wave 1 and then A, B, 1, 2, 3, 4. Looks like C is finishing up here. So looking for it to kind of reverse from around this area and head on down. Bigger picture for silver is this right here. Silver's basically been consolidating here since about summer of 2020. Consolidation here, right? But what do we see here now? We see high, low, lower high, lower low. Well, high, low, lower high, lower low. Potentially a lower high. We've got to break down below this swing low here. But this is a bearish market structure from back here in February of 21. We're kind of pushing down here at this support. We break down through that. We should come on down here. Next reasonable, big picture target area is this high volume node around $17, $18. Beyond that, you get it down here around 14.5. But again, I believe that, this is just A, B, and we're working on C here, which should drop us below this swing low over here. So it should get us below 10, probably below 8. As we continue to do that there. Let me see here. The weekly is about neutral here on RSI. Neutral here on Stochh RSI. But again, rallied up, up here, pulled back, up again to that pivot, pull back. So you drop it through here. We should, hit the S1, bounce up and then kind of come on down here, at least to here. We'll check it at that point. But, on the weekly here, that's your high volume node. If you're dropping below $16, $17 here, you're going to have a lot of downward pressure from this pushing on you. So, yeah. Not too different here with gold. And by the way, guys, remember, this is everybody was, remember the whole meme thing, and they all thought over here that they were going to, squeeze gold up to 50 or something, and, here we go the other way. Wall Street Bets, I think, was what it was, right? Haven't heard a whole lot of them lately. Gold doing a little bit more here. Might or might not be done right here. As you can see, we're getting pretty close to invalidation level. So we might get a little bit further push up here into this area right here, which gets you about 90. If we break out above this swing high up here at 18.54 and 20 cents, that'll say that that wave 4 is still in progress. Remember, we were looking at wave 4 as a triangle here. And so if it does break out above that, then we'll look at it as an A, a B, and this will be a C coming up. And so if it does break out above that, I could see it potentially getting up here around 1865 or so, this high volume node. But as long as it reverses prior to wave C over here, which is 1879.50, we should drop back down. And then we got to come on down for wave 5. So, yeah, it's kind of where we're at with that. Just a bunch of sideways here since about the last year. Yeah, this has been sideways about a year as well. Yeah, about the same time as that silver, more or less. So again, that would just be wave 4 here as a triangle. We get wave 5 lower, breaking on down. So, again, people with gold, they've been calling for a rally every bounce along the way. They've got some hope right here. But if this is that triangle that we're looking at, here, and this does break down, this area here, I mean, you need to look down. Again, gold's, you've got an initial target right here, 1507 or so, but really you're looking down here around 12 to 1300 kind of area for your major support. If you're dropping below that, like silver, you're going to feel a ton of downward pressure from this high volume node here. So not all that great if you're in there with that. I talked about triangles earlier. I said you want to see it in your RSI as well, kind of like what we have here. So you would have A, which is this swing high, B, which is this swing low, which is above this swing low, so a higher low. You have C, which is up here, lower high, D, right here, higher low, and then either E is in or it'll pop up a little bit higher here, and it should close below here. So you get that same, this is what you're looking for generally. Oh, there it is. It's already got in on there. That's what you're generally looking for in your RSI when you think you might have a triangle. I'm not a big fan of the volume, though. You should expect to see volume dropping down, and you do generally, but you do have a kind of questionable in this area. But those are the kind of things that you look for to, add more confidence in, maybe what you have as a triangle there when you're doing that. Let's see here. That's kind of where we're looking here. By the way, guys, if you're thinking about what's going on, because if you're thinking about the dollar, you have to think about what's going on with the ECB and the euro over there. Because remember, the DXY is a weighted value, and most of that weight comes from that euro USD price, right? It's almost 58%. Second most comes from the USD yen, which is about 11%. So between the both of those, you're getting almost 70% of the value of the DXY, right? So, but you really want to pay attention to the euro because, if the euro becomes more hawkish or similarly hawkish to the U.S., then there's a good chance we could see euro, putting some downward pressure on the dollar's value. But that said, let me see here what we were looking at. So I talked about earlier, like last month, I talked about the idea that the ECB was still acting was acting pretty dovish still, not even really hawkish at all. And then they came up their meeting recently and they said, well, we might have to raise interest rates at some point here, what they say. We're not going to raise interest rates yet. We're ending our emergency bond buying program coming up here. So that's kind of more hawkish for them. But they're still trying to fight that idea that they're going to have to raise interest rates. They're worried that if they do, it's going to kill off their already slow growth in terms of, prices and whatnot, right? Or not prices, but what's going on with business, right? But now apparently more of those officials over there with the ECB are distrusting that inflation forecast that they've had, right? So I think what that means is that we're probably, as I was mentioning about, we'd probably see the ECB give us at least one interest rate, toward end of Q3 into Q4, somewhere in there. I think that's looking much more possible now. Here's the thing, though. They are way behind the hawkishness of the Fed right now. The Fed is very, very hawkish, very hyper hawkish, actually. So I don't necessarily think there's anything that the ECB can say at the moment that's going to turn the favor to the way of the euro. Excuse me, man, my throat's dry here. Give me a minute. Yeah, so I don't think there's anything they can do that's really going to turn the favor to the euro. But we do need to watch them as they continue to build up here and see if they become exceedingly more hawkish. Do they do this thing like the Fed, where the Fed kind of kicked in and then started kicking in more and more hawkish quickly? Yeah. So, I always get that from people. The Fed doesn't control the world. They think they do, but they don't. The reality of it is the dollar is the world's reserve currency. The U.S. continues to most often have the most robust economy going on. So in effect, it does. The dollar controls the world more or less. It does, and I know you don't want to hear that. I get a lot of feedback. It seems mostly from people in the euro area. But for all intents and purposes, it really does. And maybe not even so much the dollar, but the euro dollar. And so people have a lot of distaste for the U.S. because of the things it's done and what they've done. And unfortunately, there's nothing that we as citizens can do much about that. Oh, go vote for somebody else. Yeah, whatever. Voting doesn't take care of anything. But the reality of it is, and I don't blame a lot in the world having a lot of issue with the U.S. I don't blame it all. U.S. has not gone about things very nicely in a lot of times. But the reality of it is, the government acts the way that every government acts. It's not that the U.S. is worse than any other government. They really are pretty much the same thing. Power attracts to it those who intend to use it. And with power and more power comes fear. People, they become crazy, right? But anyway, it is what it is. And the world does revolve around the dollar right now. Now you've got the euro. Now you've got Russia and China trying to come together in this new pact against the U.S. And, we expected that, man. I talked about that, God, probably almost 10 years ago when I was doing my master's degree in Homeland Security. And we've taken some national security classes, and I was talking about that. So, yeah. Nothing surprising there, definitely coming up here. But really, until the world gets off that U.S. dollar reserve currency, there's not a whole lot that the rest of the world can really do to change things. The problem is everybody is so interconnected globally with the U.S. and the dollar and the U.S. economy that coming down off that dollar as a reserve currency is a destabilization thing for the world. And I'm not saying it doesn't need to happen or it does need to happen. I'm not making any comments about that either way. I'm just saying that because of that interconnectedness and how it all is, it risks some really strong destabilization of the world's economies. So it's an interesting situation we're in at the moment, guys. And sometimes people get on here and I talk about this because this is the way things are, but people take it as, oh, you're from the U.S., so you just talk that way because you're pro-U.S. or whatever. It has anything to do with that. It has to be, thinking critically about what's going on, right? So, yeah, it is what it is. I can't argue with you guys about it. You're going to, feel however you're going to feel, but, understanding the world in the way I do has helped me make a lot of money. And so I've been right on these global macro things significantly more than I've been wrong. And so, at least for me, that means, I keep doing what I'm doing, right? Until it turns out that it doesn't work anymore. But there's a lot of moving parts, guys, when you think about global interconnectivity, macroeconomics, from a global lens, things like that. I mean, there's so many moving parts. Nothing's ever a simple yes, no answer or A, B answer or something, There's a lot of gray areas. A lot of things that we still don't know for sure about the way things happen. So we'll see what happens with all this. But anyway, so yeah, but again, at the end of the day, guys, I don't think that it's really that the Fed controls the dollar as much as the Fed is just a reactionary force. It's the same thing I've talked about since day one. The value of the dollar is determined by social mood. All those things that go into it. And the Fed is just reactionary. Case in point now, right? Not really doing anything while the prices were rising. Government was handing out some free money. And now all of a sudden it's like, oh, it's much more, inflationary than we thought. These kind of things. So, yeah. Blaze, let me look at something this weekend. I'll see if I can find you something and give it to you there over in Discord, man. But yeah. So, again, for the last year, everybody was talking about how the dollar was going to, continue dropping. I talked about it being bottom there in January of last year, major reversal there. It could still turn, but again, with even from a, just from a fundamental standpoint and what's going on with the Fed's hawkishness and rate hikes and all these knee-jerk reactionary stuff, there's nothing there that gives any reason for people to believe that the dollar should drop down. Especially when, in addition to that, you look at the opposite side, which is the euro, which is just now starting to become a bit more hawkish. But they're way behind, behind what the dollar's doing. So it's going to take a lot of movement on their end to catch up to how hawkish the Fed is at the moment. And the markets are, bullish long on the dollar. So, yeah, we'll see what happens overall. But I'm not one here to say that it's definitely going to happen or what's going to happen. But, we continue to go by the charts and we work with them and we take some, that information into mind of what's going on there with it. I don't know. If you were long the euro at the beginning of last year and you didn't, at least take profits at that point, I mean, you've lost a lot of potential profit. I mean, from last year. I mean, look at that. Huge bit of profit that you've lost here. If you've been long euro, right? And so, that's not really great. Now, if you've got a 30-year, 20-year outlook, okay, this isn't such a big deal. But man, if you're talking just a few years or something, I mean, that's a huge bit of, especially if you went long euro up here, that's a lot of profit to lose. This was a year long, and here you are another year later, and you've lost over half of that, what you should have had. So you got, again, you got to be careful when you're kind of looking at you don't want to be pro-euro just because you're European, right? And I've often talked about, that's the great thing about trading Forex is because in general, people who trade it aren't normally biased to their country's currency. As traders, we tend to just trade up or down because, price often just moves within ranges, right? And so that helps bring off a lot of that emotional, like the legacy markets in crypto, you're always looking for them to go right and go up, right? You just increase in value all the time. But currencies tend to move within ranges more than not. So it should make it a lot easier not to get stuck on, pro-euro, pro-dollar kind of thing. I just really think that if you do that in the grand scheme of things, just because, whatever your country is, if you're U.S. pro-dollar, if you're, Eurocentric company pro-euro, if you're UK pro-cable, something like that, I just think that sets you up for a lot more possibility of losing money. You've got to just work with what's going on with the lens that the U.S. dollar is where it is for a reason, and until that changes, generally that should be your bellwether, not whatever your local currency is. And like I said, though, if that does change with the U.S. with the dollar being that global reserve currency, again, I think we're going to go through a period of economic destabilization through many countries throughout the world because the dollar and U.S. debt is so ingrained into this international sphere. You can't ignore that stuff. You just absolutely can't. That's the world is credit based, man. Right? I say man, women, whoever's listening. So, it is what it is until it isn't anymore. But, if you're hoping it isn't just because you're anti-U.S., I think you have to at least prepare yourself for that destabilization, the economic destabilization that'll occur, most likely, if that were to happen. Yeah. Yeah, so, the U.S. dollar, by the way, guys, if you aren't aware, the U.S. dollar gaining in value is great for those countries that export, right? It's good for us. It's good for us importing because, we pay less, right? So there's that, which means that if you're a company that's exporting, you should have increased demand all things else held equal, increased demand, which is good for your country, economically, increased production, increased exporting. So, I mean, there are, depending on how you look at it, there are pluses and minuses depending on which side of the ball you're on and when you're on it. So yeah. But anyway, I mean, again, that's just kind of what we're looking here. I just want to make sure that if anybody's new here or doesn't understand my position, it's not that I'm pro-U.S. because I'm in the U.S. I'm just, I'm realistic about where things are at the moment and what they mean in terms of worldwide, macroeconomics kind of thing going on. But yeah, I mean, sorry, I just now caught this, guys. Do you see this? Let me make a copy here real quick so I can draw on this chart that I'm not using for Discord. Look at this right here. Look at that. Significant area. When we retested and rallied off that, man, if we can stay above this area or even it just dips down, come right back up, that is significant area of support resistance right there. So it would be very bullish for the dollar to continue up beyond that, finding support in that area there. Yeah. Yeah, the only thing guaranteed is change. That's right. And that's the problem with most people they're not ready for change, because that means they have to often learn things that they don't know yet, which means it's uncertainty, and people don't like uncertainty. That's why a lot of people don't like change, but change is guaranteed. Yeah. So anyway, yeah, I think if you look at the dollar, I think this becomes a very significant area right here. Maybe much more than what you thought originally. Seeing this bounce off here. Resistance, support, rallied up off, break above the swing high. But yeah, if we continue to kind of pull this over, see how that works here in general, and especially as we got to this area. Support, resistance, support. So we'll see if we can continue up. If we drop down impulsively below that, another story maybe. So yeah. Yeah, I think that's the level you were finally deciding that you were looking at, Hank, before giving up on the 80s. I believe you said was that kind of this area right here, this swing high kind of breakout. Yeah, I think you finally decided on that as the area you were looking at. So, yeah, I mean, again, makes a lot of sense as we get up through there. So this was wave 4 of what I was looking at. So wave 3, wave 4, and then wave 5 down here. So for me, this was important from an Elliott wave point, because breaking out above wave 4 is that first clue that maybe that bottom's in. Yeah. So we'll just see some, get some following up there. See how it goes, guys. At the end of the day, you just want to be careful. That's all. You just want to be careful, guys. Don't take on risks that you don't have to. There are so many different things that you can trade in stocks, in crypto, in Forex. There's so much to trade. Don't get stuck on one thing because you think you want to trade whatever it is, and it's showing you something that's a real mess. Look for the easy trades, guys. More than any time in your life, if you're in the markets, look for the easy trade. Look for the low-hanging fruit. If you spend more time doing that, you're going to be a lot more successful as a trader. Stop trying to make things work just because you want to trade this pair or this thing. That should be the last thing. You should want to trade it because the chart says, look, this is an easy trade. Yeah. So there we go, right? Okay, guys, listen, I'm going to get out of here. I am a half hour late again. But, again, overall, continues to be the same. Dollar up, Bitcoin up, stocks down. In the grand scheme of things is what I'm still looking at. As always, if anything changes, we'll be talking about it here on Tuesday or Friday. Yeah, so that'll do it. I hope you guys trade safe. You have a great weekend. Be safe if you're going out in public, of course. As always, remember, the only thing you control in the market is how much you lose. So keep working on risk management, okay, guys? I appreciate you guys checking in. I appreciate the comments and the dialogue and everything. You guys are always so great, man. It makes it a lot of fun to do this. Again, I don't guarantee that what I say is the end-all be-all to anything. All I can do is tell you the way that I see things and why, and hopefully help you see some kind of better understanding of what may be going on, even if you don't necessarily agree with it. Okay? You guys have a great day, and I will see y'all either in Discord if you're there, or on Tuesday at 11 a.m. Central Standard Time, same place. All right? Take care, guys.